The Puffer case was very similar to the Seeling case. Both concerned an Article 26 deemed supply of services on a house which was used partly for business purposes and partly as a house. In the Puffer case, the house was predominantly private purposes, so 89% used as a private residence and only 11% for business. But the ACJ still held that this was a deemed supply. So as in the case of Seeling, the trader could recover all the input tax on the capital cost of the building, even though only 11% of it was going to be used for business purposes. And then the taxpayer would account for output tax on the deemed supply of services over a period of years. And now this would create a significant cash flow advantage for the taxpayer. Many saw this as an interest-free loan from the authorities. You recover all the VAT up front, and then you drip feed back over a number of years the deemed supply of services element, so the private element. A new European technical directive was introduced with the latest date of 1st January 11, which permitted member states to exclude the upfront deduction of input tax in the circumstances of Seeling and Puffer. Now what that means, if there's no input tax deduction up front, there is no deemed supply of services. So when this is introduced in the member states, for example in the UK, you can't apply this principle to property, ships and aircraft. You would have to apportion the input tax up front. You can't recover the non-business element with a deemed supply to follow. You look at the business proportion and you recover that, and therefore you haven't recovered on the private element, and therefore on the private element there's no deemed supply. And it's really been introduced to get round the problems that Seeling and Puffer pinpointed, i.e. full recovery up front when there wasn't that much business use, and then they drip fed the effect of the input tax back as a deemed supply over many, many years. That's now been stopped by this new European directive introduced in various member states, not always on the same assets because there was an element of flexibility in it. But in the UK, for example, you cannot do this rule, and you cannot get the benefit of Seeling and Puffer, for example, on property, ships and aircraft.